I don't see any trigger for the market in a very material way to break out above 18.5, 19,000 on the way up. Conversely, 3 months back when crude was at 125, 130, and there were predictions of 150 and thereon, crude sort of bounced back to 90 to 100. So I think that will provide some downside support, both on the twin deficit as well as the currency. So I think you're probably going to get into a situation now where the range of the market has shifted. And probably for the second half of this calendar year or whatever is left of it, you're probably going to be in a range of maybe 16.5, 17 on the way down to about 18.5, 19 on the way up. The fear of the Chinese economy slowing down and what resultant impact it could have on metal prices globally. But then, of course, China, surprising with rate cuts off late, has actually sort of changed that view a little bit, that they're looking to spur the economy in whatever way they can. Now, China traditionally has always been a country where they've gone in for excess capacity, more than what they require on any infrastructure project. So I think it's had a dream run. It's had a bit of a time and price correction, but it's not a bad time to look at it, because I think India will also end up being a net consumer in a very material way. I think we're sitting about 20 months away from a general election in India. I do anticipate that government spending will pick up in a fairly material way through infrastructure projects, which will definitely increase the demand for commodity and commodity-related products. Yeah, I would look at being with the market leaders in both ferrous and non-ferrous, because they've had a bit of a time and a price correction. We still retain our positive stance on names like Ashok Leyland, Hero, TVS, and the likes. But on the auto ang side, I agree with you. I think for a lot of these players, the replacement cycle will be kicking in. I think we're fairly sanguine about the demand growth, coupled with the fact that the semiconductor issues that a lot of the OEMs have been put behind us. If commodity prices don't go through the roof, I think we should be okay in terms of the price hikes being passed on. Even though the sectors had a good run, I would still be marginally overweight the autos and auto ancillary sectors even from here.